Imagine you are offered a 100,000 yen investment that carries a 50% chance of a 20,000 yen capital gain, but the same odds of a 10,000 yen capital loss. It's not a trick. In a year of big scene-setting choices, Britain had EU membership, the US had Clinton, Trump, and Japan had this. Unlike those other examples, the results in Japan were not close. Almost 79% of Japanese wouldn't touch that imaginary product with a notional barge pole, and their real-world investments suggest they are answering the pollsters honestly. Leaving the question of how they should treat a Nikkei 225 that has risen 20% since its June low. The eye-catching loss aversion statistics are just one part of the Bank of Japan's first large-scale survey on the nation's financial literacy, research that broadly concludes Japan substantially lags the US, UK, and Germany. Some have wrongly leapt on this with triumph. The timidity inherent in those numbers seems such a neat explainer on why so much of Japan's household wealth sits in bank deposits and JGBs, and why Prime Minister Shinzo Abe's efforts to coax some of those over to riskier investment have failed. But are the Japanese such bad investors? Over the past 20 years, they've had to wrestle with stock collapse, property price collapse, deflation, and 2 freezes of bank lending. So until this year, when yields on some bonds turned negative, their decision to hold cash and JGBs was in fact the financially literate choice. Their resistance to the stock market arises from the fact that most Japanese work for a Japanese company. They are effectively insiders who know perfectly well that corporate Japan doesn't instinctively strive to reward shareholders. But things are clearly changing, and the Nikkei's turnaround this year suggests it may be doing so rapidly. If Japanese households are actually smarter than they are given credit for, will they be convinced that this time is different? For the first time ever, Japan Inc. is in an earnings recession, but simultaneously raising dividends and increasing share buybacks. That has never been in the script of Japanese investment before, and it means the Bank of Japan may need to change its killer question for next year's survey.